Hello ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a technical look at some of the major currency pairs for the July 28, 2022. Before I get into the technicals, the GDP came in weaker than expected at minus 0.9% versus 0.5% estimate. That puts GDP at 2 negative quarters in a row, which is technically a recession. Most of the declines can be attributed to drags on inventories, and net exports, however, were a positive for the report. Also, inflation dragged down real growth. The deflator at 8.9% took a full percentage point off the headline compared to what was expected. So that is being attributed to a decline. We saw U.S. stocks in pre-market trading initially move lower, then they rebounded back up to unchanged. They're down marginally as I speak in volatile up and down trading, but relatively confined after yesterday's sharp gains, which saw the Nasdaq index, I think, have its best day since April 2020. So let's take a look at the Forex market and the moves that we've seen in the US dollar. And the dollar has weakened a little bit off of higher levels. Looking at the euro versus US dollar here on the hourly chart, the pair has been confined to a range over the last 1, 2, 3, 4, 5, 6, 7, 8 or so trading days here. Yesterday we moved to a new low going back to July 18th, and that took the price below the 50% retracement of the last move to the upside here. That was more bearish, but then we saw the FOMC decision come out, and the dollar started to weaken as yields went down, stocks moved higher. We saw risk-on type of flows. That took the price of the euro versus US dollar back above the 100 and 200 hour moving average, and it tried to stay above that level all through today, until the London session, where it finally gave up, fell below those levels, and saw buyers turn to sellers quickly, and the price moved back toward the 50% retracement of that move to the upside. So we did hold support there, and we are seeing a rebound back to the upside on the weaker GDP data. Guess what? The 100 and 200 hour moving average remains resistance on the top side. That level comes in at 1.0188, somewhere around that level, maybe a little bit lower for the 100 hour moving average, but that area would be resistance on further momentum. We're currently trading at 1.0163. 50% retracement is support down below. Same story, range bound. Euro trying to find its legs, can't really find them. Trading up and down between technical levels with little breaks along the way that don't go very far. On the top side, if we were able to get above the 100 and 200 hour moving average, it puts puts the market in this upper region where we have the 50% retracement of this longer move to the downside. We've talked about that over and over and over again over the last 8 or so trading days. So that level currently comes in at 1.0283. We know that level by heart now. Dollar versus yen. Seeing the dollar versus yen extend the move to the downside in trading this week. The price corrected yesterday right up to the 200 hour moving average, also the 50% retracement of this move to the downside. The inability to move above that 200 hour moving average and the FOMC rate decision sent the dollar yen back below the 100 hour moving average, where it continued in trading today to the downside. As you can see, the price is now breaking, or has broken, below the next targets here, which include swing low, swing low, swing low between the 134.67 and 134.77 level. The next target comes in at this low right here at 134.497, and then we have the low going back to June 23rd at 134.23. So selling pressure in the dollar versus yen as yields move lower, and also the growth from the GDP comes in negative, suggesting that the Federal Reserve might not have to raise rates by 75 basis points at the next meeting. In fact, it's moving down as we speak, those chances, and that is giving the dollar the focus out to the downside. Traders will be watching these broken levels as levels of resistance now on rebounds, in particular the 134.94 level. Also, I want to go to the into the monthly, no, is it daily chart 135.16. The 135.16 level corresponded with these lows through here. So the price moved below those lows, currently testing the 38.2% retracement of this move to the upside on the daily chart at 134.40. The low for the day came in at 134.54. So there is a little bit more room down to that level, but keep that level in mind on the downside for the dollar versus yen as we continue the move in that direction. The pound versus US dollar is also seeing a little rebound after the GDP data. Yesterday we saw the pound move sharply higher on the FOMC rate decision, and in the process we moved above the 61.8% retracement, but is finding another sort of ceiling area in this swing area, where we had the swing low and then a move higher and then a swing highs through here and another swing highs through here. That area comes between 121.77 and 121.876. Kind of looks like these highs through here, where we had 123, now we have 123 in a shorter period of time. So we have a new resistance level up there, and we moved down, but stayed above the 50% retracement and above these previous highs through here, and moving back up toward the 61.8% retracement, 121.587. Get above that level and we start to look toward this swing area up to 121.876 and a new ceiling for that currency pair. The dollar versus Swiss is interesting. Why? Because the SMB said it may take monetary policy measures at any time between regular assessment dates if so required. So that sent the Swiss franc higher. Actually, before the GDP data, we saw that pair start to move to the downside. The dollar moved the lower, the Swiss franc new move higher, and since the GDP, we've made a new low for the day, and trades at the lowest level going back to July 4th here as well. The high price that we saw in yesterday's trade and again today was able to get briefly above the 100-hour moving average, where we held resistance against a 200, held the resistance against a 100-hour moving average. So the buyers had their shot. They missed, helped by the FOMC yesterday, and today we did it again. They had another shot above the 100-hour moving average, couldn't do it, and moved down, foiled by the Swiss National Bank this time. So two central banks hurting the US dollar versus Swiss pair, giving the Swiss franc a bid to the upside in trading today. That's keeping the bears more in control. We also fell back below the 100-day moving average in that currency pair. So keep that in mind. More bearish bias here for the dollar versus Swiss. That's it for me. My name is Greg Mikulowski. Good fortune through trading. Bye-bye now.